I believe that at a minimum, precious metals will regain their 4-decade mean market share, which means that demand for precious metals related investments, gold, silver, gold stocks, silver stocks, that type of thing, demand for those will quadruple. That's precisely what I think is going to happen. I'm afraid that the gold price is going to go to $6,000 or $7,000 or $8,000. Am I saying that's going to happen? No, but I am saying twice before in my life, gold has generated really, truly substantial gains that offset losses that might otherwise occur in people's portfolio. And the ignorance of that history is incomprehensible to me.
Gold has increased by $179.94 per ounce, or 9.86% since the beginning of 2023, as per trading on a contract for difference, CFD, tracking the benchmark market for this commodity. Following a remarkable 2023, gold prices surged to another record high this week. Geopolitical tensions and consistent central bank purchases are anticipated to sustain demand resilience into the coming year. According to the World Gold Council, WGC, the collapse of the Silicon Valley Bank and the Hamas attack on Israel were the most significant events influencing gold demand, estimated to have added between 3% and 6% to the metal's price over the year. This led to gold surpassing $2,100 per ounce on Monday, though it slightly moderated afterward, with spot prices stabilizing around $2,030 per ounce early Friday. By the week's end, it pulled back closer to $2,000 from its peak of $2,070 on December 1st. This pullback followed a robust jobs report, which tempered expectations of accelerated rate cuts by the Federal Reserve in 2024. Gold and silver attempted to surpass the 23.70 level, but consolidated above it. This consolidation suggests a potential bullish wave, targeting the 24.60 areas primarily. Rick Rule strongly advocates for the inevitable rise of precious metals, driven by concerns about the depreciation of purchasing power in fiat currencies. He emphasizes that those unconcerned about maintaining their purchasing power lack literacy and basic numeracy, citing quantitative easing, debt, deficits, negative real interest rates, and inflation. He predicts a potential surge in gold's value, suggesting the possibility of gold rising from its current value of $2,042 to $6,000, $7,000, or even $8,000 per ounce. For Rick, the rationale behind owning gold and silver goes beyond short-term price movements or technical analysis. Historically, gold has generated substantial gains, mitigating losses in investment portfolios. Despite this track record, many overlook or dismiss precious metals' protective and lucrative potential during economic turmoil. We will present clips from Rick Rule's interview with Liberty and Finance, but before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
I think now that it's inevitable that precious metals will do well. I say it's inevitable for reasons that you and I have discussed ad nauseum over the last 3 years. Precious metals do well when people are concerned about the purchasing power of their savings denominated in fiat. And anybody who isn't concerned about the maintenance of their purchasing power is both illiterate and innumerate. We've talked about the subdivisions of concern before. Quantitative easing, which is really counterfeiting. Debt and deficits. Negative real interest rates. Inflation. There are some people who are less concerned about inflation because they follow the CPI, the Consumer Price Index. And I want to disabuse them of that right now. The CPI is not a measure of the depreciation of the purchasing power of your savings. It's a constructed index constructed by the big thinkers, hedonistically adjusted, which means they decide what an apartment is worth or what a computer's worth. They don't let the market decide. Too inconvenient for them. It doesn't, when it's inconvenient, include food or fuel. Then again, I like to eat. I like to drive. But most importantly, it doesn't include tax. I think it's very important to do that. I have now been through 2 major bull markets in gold and 3 small bull markets in gold. And in, as I say, the reference market that I have for the bullion, which is the decade of the 2000s, the gold price increased, as I say, from $253, $255 to $1,850 an ounce. A little bit of portfolio insurance salvaged your purchasing power from what could happen in other sectors. and it did it very well. It's very difficult for me to understand why people wouldn't do this. I'm not suggesting that people put 100% of their net worth in penny silver stocks. That's not what I'm saying. Dunnigan, your listeners will be shocked to learn that the market share of precious metals and precious metal securities in the U.S. market is less than 0.5%, which is to say less than 0.5% of all savings and investment assets in the United States are precious metals related. The 4-decade mean market share of precious metals is 2%. I believe that at a minimum, precious metals will regain their 4-decade mean market share, which means that demand for precious metals related investments, gold, silver, gold stocks, silver stocks, that type of thing, demand for those will quadruple. That's precisely what I think is going to happen. And if you look at the moves in the XAU, if you look at the moves in gold price over time, what you'll see is that when they occur, and they're rare, they are absolutely dramatic. The idea that somebody wouldn't want to put themselves in the way of this move is incomprehensible to me. I don't own gold because I think it might move from $2,042 to $2,150 or $2,200. I don't care at all about technical breakouts, $3 or $4 above the trailing average. I own gold and silver because I'm afraid of the deterioration of the purchasing power of my savings in U.S. dollars. I'm afraid that the gold price is going to go to $6,000 or $7,000 or $8,000. Am I saying that's going to happen? No. But I am saying twice before in my life, gold has generated really, truly substantial gains that offset losses that might otherwise occur in people's portfolio. And the ignorance of that history is incomprehensible to me.
The U.S. banking crisis triggered worries about the global banking system earlier in the year. 3 mid-sized U.S. banks, Silicon Valley Bank, Silvergate, and Signature, fell quickly, driving down bank share prices worldwide. Rick acknowledges the current state of the U.S. banking system, recognizing its vulnerabilities and comparative strength when viewed on a global scale. While the U.S. banking system faces precariousness, it still maintains a higher level of resilience than many other banking systems worldwide. CEOs of U.S. banks cautioned about potential challenges due to a slowing economy and escalating geopolitical tensions, noting that these factors could impact their earnings. However, they highlighted that the industry had stabilized after experiencing significant bank failures after the 2008 financial crisis. Despite acknowledging the weaknesses inherent in the U.S. dollar, Rick highlights its status as a relatively liquid and transparent currency. He advises depositors to exercise caution and deliberately select financially stable banks, emphasizing the importance of diversifying deposits across institutions with substantial equity instead of solely relying on FDIC insurance. Let's get back to the interview.
They are outside the system in the sense that they aren't covered by federal deposit insurance, and how you hold them is up to you. They are not outside of the financial system. They are listed on the New York Stock Exchange. If you're a real doom and gloomer and you're afraid the New York Stock Exchange is going to shut down, I'm not. Don't own those vehicles. If you think that the Canadian government will march into the Royal Canadian Mint and steal all the gold and silver in Canada, do not own these vehicles. I don't believe that. I do own these vehicles, but they are certainly out of the banking system. They are beyond the touch of the FDIC. I don't personally believe that the government is going to come steal anybody's gold or silver. I don't believe that because, among other reasons, there's 400 million handguns in private circulation in the U.S. That strategy entails some risk. And government can steal from you in riskless ways, like inflation and taxation, excess government spending. That's very popular. Most Americans applaud the government when the government steals from them. It's only when the government proposes to steal overtly that things get nasty. So I think the probability that the government steals from you overtly is very, very, very low. The probability that the government continues to steal from you covertly is a 100% certainty. Further to the U.S. banking system, as shaky as it is, it is ironically one of the strongest banking systems in the world. As challenged as the U.S. dollar is, Doug Casey would say it's the weakest currency in the world with the sole exception of every other one. We live in a truly strange place where a basket case like the U.S. dollar is a haven of liquidity and transparency. It is neither really liquid. Well, it is really liquid. I take that back. It is very, very, very liquid. To describe our system as transparent is probably not accurate, but compared to the rest of the world, it's extremely transparent. And it is very easy in the United States to find hyper solvent banks. It's incumbent on you, the depositor, to find those solvent banks. It's incumbent on you, too, not to be lazy. It's incumbent on you, if you have large amounts of cash on deposit, to split that cash among institutions, not just among institutions that are FDIC insured, but rather among institutions that have enough equity in them that they won't need the FDIC insurance. The idea that people are putting large amounts of deposits with the big five chartered banks in the United States, so much money that the big five chartered banks don't have to pay them deposit interest, is an insanity. People are giving up net present value for supposed safety without paying any attention to the financial ratios around those banks, which, as an example, with regards to the Bank of America, the time mismatch between deposits and liabilities is an institution that exhibits real risk.
According to Trading Economics, global macro models and analysts' expectations, gold is expected to trade at $2,094.54 per ounce by the end of this quarter. What are your thoughts on future price movements of gold and silver? Share your observations in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.